this is really impressive, all the net income Netflix makes. But yo, what's up for you guys watching this on the YouTube replay? Dude, stocks are so green today. I'm reading both the YouTube and the TikTok chat. What's up? So look at our main account right here. I mean, obviously we're down from the peak this morning. We were up almost 4%, but yeah, we're up 2.31%. Here are all the stocks that we own in here. And I mean, we're still down not that bad. Actually, we're only down 8% year to date. If we compare that to the QQQ, for example, the Qs are down 11% year to date. So yeah, this is our main account right here. And also our Mumu portfolio, we're up 5% on the day in here. We had a company report earnings this morning, and this was Amphenol Group, ticker symbol APH, and they're up 10% today. They had a nice jump up. They beat on every metric. I'll be super quick about this because no one probably knows about this stock. But look, the orange line is what the analysts were expecting. They beat on revenue, they beat on net income, and they beat on EBITDA by a huge chunk. So it was incredible. Yo, what up, Glenn? Good to see you, friend. Stocks are down. Yo, for me, my portfolio, this account is up 5% on the day. And my main account, we are up. I mean, we're down year to date, but we're up 2.3% on the day. So, uh, most most stocks are green, but yeah, we are kind of falling from the peak we had this morning. But everything is really green on the day. So yeah, congrats if you own any stocks. Yeah, and if you guys got any stocks you want me to look at, let me know in the chat. We can check them out. And yeah, what's up, William? So yeah, we had Amphenol Group report earnings, and look at Amazon right here. Amazon's up 5% on the day. I'm so glad I bought the dip on them 2 days ago. And again, look at this stock right here. Here's why you don't listen to me. We're down a lot of money on this company right here. So make sure you have a diversified portfolio. Always do your own research. So here we go. Someone said, check out BYD. This is a Chinese company. This is like the Chinese competitor to Tesla, and the stock is literally close to an all-time high right now. They make way more net income than Tesla does. And Warren Buffett is a major shareholder in this. Warren Buffett and Berkshire Hathaway actually owns a lot of this. For the full year, yo, Tesla just reported earnings. You know what? We got to go check out Tesla too. But they made 5.7 billion of net income. Guys, I'm shocked that Tesla is up today. So look, Tesla's up 6% on the day. Most of that was because like Elon said he's going to focus more on Tesla. But look at this right here. This was very bad. They missed on revenue. The analysts were just so wrong here. They missed like over 50% on their net income, and their EBIT was only 400 million. That's so sad. I mean, net income was down 60%. Dude, after oh my goodness. Anyway, I'm shocked the stock is up. Congrats if you own Tesla, though. The stock's doing great. Oh, what up, New York? You said DCTH. And what's up, Catherine? How's it going? So this is Delcath Systems. This company is on my watch list right here. What's the market cap? So look in the top right here. This is one of the few small caps that I do like. This whole company is worth $400 million. So they're a very small company, so you got to be careful about that. But look at this sales growth. So again, it's a small company. The sales are only 15 million, but the sales are going impressively, and they're getting super close to net income positivity. And they have a really good balance sheet. I don't know what happened in the most recent quarter, but their assets just jumped up and they now have no liabilities. So yeah, DCTH is a pretty decent small cap stock. But again, you got to be careful with those small cap companies like a SoFi or a super microcomputer. I like having exposure to these kind of stocks, but I can't put a lot of my portfolio in them just because they're so risky. So yeah, Marvel, what up? Oh, WA said MRVO. What's up, Bougie? Yes, sir. Yes, sir. We are back. Um, I've made around 10% in 2 weeks from BYD. Yo, that's what's up, Rahul. That's been a great stock to own. They're pretty close to an all-time high. So here's Marvel Technologies. Now, I believe they're like a semiconductor stock. But here's the good news. They just made net income for the first time. Look at that. They made $200 million. As long as they can keep up that trend of net income positivity, that could be great news for the company because they do pay a dividend. You got to make net income to pay a dividend. So as long as they can keep up that net income growth, I mean, or just staying net income positive, I do like Marvel Technologies. I also like an AMD. What is a PE ratio? That's just the net income multiple. So if you look at I don't know, you know what? Let me go to like Warren Buffett's portfolio real quick. I'll just simple stock like Coca-Cola right here. Coca-Cola trades at a 29 PE, so they trade at 29 times net income. The PE ratio is just the net income multiple plus the buybacks or dilution that they do. So if they dilute you, it's just the net income per share, and if they issue more shares, then it goes down. Anyway, uh, let's see. Someone said, "Ooh, is this advanced auto parts?" So yeah, this is they've really been a loser compared to AutoZone and O'Reilly, which is really unfortunate. Yo, O'Reilly stock is doing incredible right now. And unfortunately, this company just lost their growth. So look at this right here on a net income basis. I don't know how, but they just lost 400 million of net income. Obviously not good. The sales are down year over year. So I don't know how they had such a big loss. Yeah, that's their assets just declined as well. I can understand why this stock has done so bad. I don't know if I'd buy the dip on this one. Do they have a dividend? They have a 3% dividend yield. So, but because of that net income loss, it makes their payout ratio look insanely high. Anyway, um, closed stores. Oh, okay. Does anyone speak English? Yeah, we all speak English. What's up, Gatorade? Let's see. Thoughts on what's up, Bougie? WFRD. What's this company? I've not heard of them. Weatherford International. So they're a $3 billion company. Looks like they haven't been doing too good the past year. So I wonder why. Let's go check the fundamentals here. So well construction. Oh, so this is an oil and gas stock, is or maybe a water stock. I mean, let's check out the net income though. So yeah, the net income fell 30% year over year. That's probably why the stock has fallen because the profits have fallen 30% and the sales are down 12%. So they lost their growth, but they have a dividend, a nice dividend, low payout ratio, low valuation, but unfortunately they kind of just lost their growth is what it looks like. Do you buy gold? I actually do not own any gold. I mean maybe some gold jewelry, but no, I don't own any like real amount of gold. But that hasn't been the move. Gold's pretty close to an all-time high. So congrats if you do own gold. I wish I did, to be honest with you. Just gold's doing great. So yeah. Ooh, Soros, what's up? Soros said Intel. So this is a company I I just way rather buy a Taiwan semiconductor over this stock right here. So here's Intel right here. Unfortunately, this stock is at the 2014 low. So if you bought Intel in 2014, you'd be down on your money. But here's the only good thing about Intel is that they have a huge market share, 65% PC GPU market share. So they have a 65% market share, but look at this right here. Here's the scary part. They lo- the net income is just so inconsistent. Like, I don't know how, but last quarter they lost $17 billion. If we go to the free cash flow right here, they just are a money losing company. So, in my opinion, I, I, it could be all priced in though. I get that, but I'd rather buy an Nvidia. Here's Nvidia right here. Look, they also have exposure to GPUs. Nvidia has an 18% PC GPU market share, but look at this. Nvidia's printing money. They made 22 billion of net income just in the most recent quarter, like 22 billion in 3 months. That I can't even like comprehend that, and it's growing. It's still growing. So yeah, Nvidia. I'd probably rather buy them than an Intel. I have capital of 8K. Yo, that at 14 years old and you're looking to buy stocks. So in my opinion, my friend, again, not financial advice, nothing in this is. In my opinion, I would just do an S&P 500, a VOO for the majority of that money because it breaks your money up for you into the top companies like Apple, Microsoft, Nvidia, Amazon, Meta. And a lot of these companies I happily own individually, and I do own them individually. Like I own Google, I own Amazon right here. I've been loading the boat on Amazon. So I put most of that in the S&P 500, then maybe play around with some individual stocks or a QQQM. This is the Nasdaq 100. It returns like 8 to 9% a year, and it's more tech heavy. But yeah, again, not financial advice. You could lose a lot of money. Like look at this stock right here. But yeah, S&P 500. You should just get 7 to 8% a year on that. What trade? Oh yeah, if you want to get this app, it's in the link tree in my bio. First link there. Thoughts on MSTY? Yo, that is a covered call ETF. So you buy this to maximize your dividend income. This thing has a 133% dividend yield. So that just doesn't sound sustainable in my opinion. So actually, let me look at this on Robinhood. My MSTY. So yeah, look at that. They're down 30% the past year, but you do get the nice dividend. So you mainly buy that to maximize your dividend income. You're not really buying that to outperform the market. Oh, yeah, here's our main account on the day. We're up 2% right now. I mean, we're still down 8% year to date. Here are all the stocks that I own. Only stock red today is McDonald's in here. You know, McDonald's, they hit an all-time high yesterday, pretty much, on the dividend reinvested chart. Did you buy Bull? I did not buy BULL, but I can check them out though. Oh, we had a beat said HIMS. So this is Hims and Hers. This is a debt-free company. Yo, Eric, what's up? We'll check out ANF as well. Yeah, if you guys got any stocks you want to look at, let me know. I'm reading both the YouTube and the TikTok chat. We're streaming on both platforms. My YouTube channel is in the link tree in my bio. It's called Nathan Robert. But here's Hims and Hers. Yo, I don't sell anything either. I don't have a course book, Discord, WhatsApp, Telegram. The only thing I have is a YouTube channel. So anyway, here's the most impressive part about Hims, and this is so impressive. The revenue is up 95% year over year, literally to a new record. This is incredible sales growth. I mean, that's why they deserve all the hype. And on top of that, the profits are at a record, and they have no debt. They're a debt-free company with 300 million of cash. So from a fundamental point of view, I love the fundamentals there. I actually have a watch list of all debt-free companies. So all these stocks here have no debt. You've probably heard of some of these like Celsius, GameStop, Zoom, Yelp, Pinterest, DocuSign, Reddit, Duolingo. They're all debt-free companies, which is pretty cool. Uh, let's see. Do I sell t-shirts? No, I do not have any t-shirts or anything like that. Oh, yeah, let's look at A&F right here. Well, yo, good to see you, Adrian. How's it going? A&F. So this is Abercrombie and Fitch. Has anyone heard of this brand? They sell like shirts and stuff. The PE ratio is super low just because they're an apparel company. They just sell a commodity, but they're trading at 7 times net income. That's super cheap, and the net income is growing. It's up 17% year over year. So, yeah, honestly, this is a pretty decent one. They're probably going to pay a dividend one day. They're probably doing a lot of stock buybacks, but I think Abercrombie and Fitch is hurt so much just because of the whole industry. Like, look at Nike right now. Nike's at a 2018 low. Like, that is super sad for Nike. So yeah, I think it's just the whole industry, unfortunately. Hey, what up, Luffy? He said Target stock, TGT. Yeah, this one I think is a really good dividend play right here because if we go to their dividend, you get a 4.8% dividend yield, and the payout ratio is only a 50%, so they actually have room to raise their dividend, or at least I know that the dividend is safe. Now, they're trading at a super low valuation, 10 times net income, because they kind of lost their growth, but the dividend's still safe. The sales are down 3%, which isn't the end of the world. Sales are down 3, but the net income was down 20, so they lost a bit of their margin. But anyway, they could still easily afford that dividend. So I think that one's kind of like a I own the stock. What's it called? T Row. This is a great dividend play. You'll like this one, Luffy. I feel like this company has no debt at all. This is a debt-free company, and they have a sustainable 5.7% dividend yield. The payout ratio is only at 54%. I do own this one. I own like a little bit of them, but that's a qualified dividend play in my opinion. Uh, let's see, yo, BLZE. What's this one? This one, Backblaze. So super small company. They're only worth 250 million. Unfortunately, the stock's close to an all-time low. So computer backup and cloud storage. Well, hey, look at that. Their cloud storage business. Wow, this is doing great. It's up 21% year over year. What about their computer backup? That's up 13% year over year. You know what? I love the growth here. So yeah, sales are up 17%, but here's the bad news. Yikes. They're losing a lot of net income. And for a market cap of only 200 million to lose 45 million a year, I'd be careful with that one. Just because of the net income losses. I really want to see that one get close to profitability. That if they could get close to profitability, that could be a great stock. The growth was really nice there. What oh hey, yeah, if you want to get this app, it's in the link tree in my bio. Very first link there. It's actually a brokerage. Um, it can track like all the super investors like Nancy Pelosi, Her largest holding is Apple, Apple and Amazon, I've been recently loading the boat on Amazon. I think that's a great just buy and hold for the long run kind of company. So anyway, let's see. Adobe. Ooh, yeah, dude, this is a great software stock. Almost on a daily basis, I use Adobe After Effects or Adobe Photoshop. And don't tell anyone, but I have the hacked version of Adobe Photoshop. Okay, so anyway, the stock is not done too good, unfortunately. So stocks, but here's the thing: I love the fundamentals here. They have a great software. Look at the business here. This is incredible growth. In 2018 it was 7 billion. Now it's 15 billion. So they're just growing, double digits every year. What about the digital experience? Yeah, look at that. Look, see, the growth is the exact same. It's incredible there, and also the free cash flow. They're making 2 to 3 billion of free cash flow every quarter. They're making so much net income every quarter. So yeah, Adobe, I really like this company. And the fundamentals are doing great, but the stock price is just so suppressed just because of the stock market. I think people think that generative AI is going to take over Adobe, but I think that's very far away. But that could hurt their business model in the future. But the fundamentals are great, in my opinion. I got a whole lot of Amazon at 168 to yo, that's a great price. Yo, Adrian said QBTS. Yo, I've been saying I don't this company, if I wanted quantum, and I say this every time, I'd way rather just buy Google stock because The stock's doing good though. That's the thing. They're up 12% on the day, but there's no fundamentals here really. And this is what I like to look at. But the sales are only 2 million. The sales are down 20% year over year. So that's unfortunate. And I don't know how, but they just lost 90 million of net income. They're just burning net income every quarter. So I just try not to buy any money losing companies. I do have a very few, but I they're losing money and the sales are only 2 million and is down 20%. The growth might be there in the future, but yeah, it looks like next quarter they're expected to make 10 million, but I just can't trust a lot of my money with that kind of company. But the stock's done great. Whenever quantum stocks move, that's usually the main mover. They move the most. So, here's a cool one, TTWO. So this is the company that owns Rockstar Games. So if anyone's heard of GTA 5, GTA 6 is about to come out this year, and the stock's pretty close to an all-time high. Now, the fundamentals aren't really great here, but when GTA 6 get released, the growth is going to be crazy because the sales are down 0.5% year over year, but they haven't released GTA 6 yet, and they confirmed that they're going to release it this year. So that's why the stock is doing so great. I'm going to share with you guys my favorite. If you're interested in video games, here's the best video game stock of all time. And this is Tencent Games. If you've heard of Riot Games, this company right here owns League of Legends, they own Valorant, they own Supercell, so they own Clash of Clans, Clash Royale, they own PUBG. They're literally a monster company. So this is a $566 billion company and they're Chinese, but this is Tencent Holdings. I do like that stock. Uh, oh yeah, hey, what up, Louise? If you want to get this app, it's in the link tree in my bio. It's the first link there. It's actually a brokerage. So let's see. Oh, what up? Quiet said VRT. So yeah, I just drove past a huge Vertiv like factory. I saw their logo on the side of the building. It was cool, and I thought about the stock. But the stock is up. Oh wow, they're up 11% on the day. They must have reported earnings or something, or I don't know. But the stock's done great. So yeah, they do look at their product sales. This is why I like them. The growth is up 30% year over year. So the revenue's up 30% year over year. And if you look at the service and spare parts revenue, it's up also double digits, up 11% year over year. It's 22% of their business, but the main products business growth is up 30% year over year. Very impressive. And if we go to the net income right here, they had some one-time adjustments, so you really want to look at the operating profit right here. It was up 56% year over year. The valuation says they're trading at 50 times net income. They're really trading at 25 times net income. They had these one-time adjustments. So anyway, I do like this one. They also have a sustainable dividend, super nice dividend growth, but the yield's really low. So anyway, let's see. Enphase Energy? Yeah, dude. I do own that company. Let's see. Again, here's why you don't listen to me. This isn't financial advice. I'm down 15% all time in here. Where's our Enphase Energy? So yeah, our only stock that's down in this portfolio is Enphase Energy. And again, I just like being completely transparent. I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. But Enphase just came out and reported earnings. This is a solar stock. They sell solar panels or the AC to DC converters. They sell the micro inverters, but they're moving their manufacturing out of China and moving it to South Korea, and it's going to cost them 1 year of net income to do it, is what I kind of heard from the earnings call. So yeah, I do own that one, and I am down on them. I don't own much of them. Like those risky kind of companies, you don't want to put a lot of your money into them, like Toast and Yelp. But in like SoFi, I don't want to put a lot of my money in SoFi just because they're really risky. Oh yeah, here's some of my most recent purchases. I've been buying Disney. I think that one's at a pretty fair valuation. Dave, Yeti, and Reddit. Yo, I'll be super quick. I'll be super quick about Reddit. Forget that the name is Reddit of this company, but look at this sales growth. The sales are up 71% year over year to a new record. And look at this balance sheet. It's a monster balance sheet. No debt. Debt free with 2 billion of cash. So Reddit's another financials play. They're on my debt-free watch list right here. Duolingo is another great one. Uh, so anyway, someone said, oh, here we go. SKBL. Is it a good time to buy? Let me check it out for you. Skyline Builders Group. So they just IPO'd like a couple months ago. So they're only a $300 million company. Very small market cap. But yeah, because they just IPO'd, there's not much history I can look at here for revenue. So I probably just avoid that one. I just look elsewhere. What up, Vinny said SUNE. And we'll look at Marathon as well. So yeah, I'm reading both the YouTube and the TikTok chat. What's up? Hey, I'd appreciate if you guys would go to my YouTube channel. I'm scared my TikTok account's gonna get banned. So anyway, here's SUNE. They're only an $8 million company. Please, please, please stay away from this company. The whole company is worth 8 million, and let's see, and they lost $6 million just in the most recent quarter. So yeah, that company, I can see why they're at all-time lows. Please, again, not financial advice here, but I just couldn't buy that one in my opinion. So here's Marathon. This is a Bitcoin mining company. It pretty much just follows whatever Bitcoin does. Yeah. Let's see. If we go to you mainly look at the balance sheet for these companies. So yeah, the assets are growing, which is great. That's like the value of their Bitcoin. But unfortunately, these Bitcoin mining companies just don't keep up with the actual price of Bitcoin. Like Bitcoin's done great. Probably my favorite crypto stock would probably be Coinbase. Again, not financial advice here, but it usually just follows whatever Bitcoin does. But look at this metric right here for Coinbase. Their monthly transacting users are 9.7 million. So they have a lot of users on there. And look at the free cash flow. The free cash flow just exploded to a billion. The net income, look at the net income they're making. So anyway, I do like Coinbase. Can you check cake stock? Yeah, that's cheese. That's the Cheesecake Factory. They got like 100 things on their menu. And look at that. The stock, I mean, on the monthly, they're the same price as they were as in 2017, but they've done great the past year here. And on top of that, with the Cheesecake Factory, you get a 2% dividend yield that they frequently raise. So that's what's cool about the Cheesecake Factory. So yeah, Cheesecake Factory 75%. Then they own like North Italia and some other restaurants. But let's check out the bottom line here. Wow, the bottom line is really improved. They sometimes used to lose net income, but they're making net income every quarter like 40, 50 million. So actually, that's not bad. I like the bottom line growth. Yo, what up, Cruz? Deep thoughts on Bitcoin. I'm considering selling out of it. I I don't own any crypto, but there's I wouldn't mind having a small part of my portfolio in Bitcoin. Bitcoin's unique because they don't have any like uh, earnings report to miss on. Like Bitcoin can't miss on their net income or miss on their quarterly vehicles delivered. You know what I mean? So that's kind of a cool like feature about Bitcoin. Oh, and check this out. Here's our main account. We're up 2.6% on the day. Only stock down is McDonald's. Yikes. And yeah, the Qs are up 3. So hey, nice. Nvidia's up 5.4. Let's go. I followed because, hey, I appreciate you, NAF. Thank you so much for the follow, man. Let's see here. MicroStrategy as well. Yeah, that's another Bitcoin stock. MicroStrategy, you they're trading at like 2x their current Bitcoin uh reserves. But look at this right here. Here's what's so impressive. You see how their assets just exploded? That's because they issued a bunch of shares, billions of shares, and bought billions of Bitcoin with it. So yeah, one of the biggest holders of Bitcoin is just MicroStrategy. And the stock just trades with Bitcoin now. So let's see. Do you like Constellation Energy? Oh yeah, dude. I still like them right here. I can't wait to see what happens with their Calpine acquisition. I'll be quick. This company right here this is the largest nuclear energy stock. They own 55% of all the US nuclear energy facilities. I'm only up 2% on the position. Before today, we were down on the position, but this is one that I really like. I think the risk to reward looks pretty fair on this stock right here. Yeah, look at them. They're down 36% the past 3 months. They power a bunch of data centers. They have that 3 Mile Island data center. They have a data center, or sorry, they have a nuclear energy facility that just powers one Microsoft data center. It's that valuable. Anyway, uh, wait, is there no link in my bio? Can someone double check me on that? Maybe reset the app. Maybe. Oh, maybe there isn't. I don't know. I might need to go fix that real quick. Wait, hold on a sec. Can someone check if there's a link tree in my bio? If there's not, then I forgot to do that. Someone said Amazon right here. So yeah, Amazon's doing great today. They're up 5.2%. So let me see. The best part about Amazon is just the bottom line growth right here. Like the net income was 20 billion just in the most recent quarter. All right. Well, I I have to there's wait, hold on. I have to go add this real quick. So this might take a second. I do apologize. You know what? Go grab a drink or something. Give me 10 seconds. You can't see the screen, but I will be back. It'll be back up. Oh, see, this is why. Wait, there is a link tree in my bio. Okay, wait, hold on. Let me turn back on this. So yo, yeah, anyway, it just should be working. Anyway, maybe I'm crazy. Sorry. All right, we're back. We're back. Sorry, I didn't mean to do that. All right, so yeah, Amazon made 20 billion of net income just in the most recent quarter. I think you have to reset the app. I don't know. Anyway, if the best part about Amazon is right here, the Amazon Web Services. This is the most valuable part of Amazon. This brings the most of their bottom line. It was up 18% year over year. So yeah. Oh, what's up? Someone said DECK. So Decker, or yeah, Eric, what's up? So this is Decker's Outdoors. This is the company that's been stealing Nike's market share. They sell like shoes. I think they own Uggs. Oh yeah, look at that. They own UGG if you've heard of those boots, and they own Hoka. Let's see how Hoka's doing. So let me go to the annual. Yeah, look at this growth. This looks like the opposite of Nike. So Hoka's doing great. What about UGG? Yeah, they're doing pretty decent, up 11% year over year. But anyway, their net income is up 17% year over year, when Nike's net income is down like crazy from the previous year. So yeah, that's a unique. They just sell commodity. They sell shoes, but those like running shoes they sell are really popular right now. Hey, appreciate you, Adrian. Yeah, I appreciate y'all. I didn't mean to. All right, here's Palantir right here. This is a great software company right here. And the government loves them. Check this out, 55% of the revenue just comes from the government. Nearly every police station uses Palantir's data and their software. And look at this, the sales are up 41% year over year. Incredible government revenue growth. Same with the commercial business. This is up 31% year over year. So just an incredible growth company. And they have no debt at all. Palantir is a debt-free company with how much cash? Let's see. 5.3 billion of cash, and their cash just keeps on growing. They're in my debt-free watch list right here. Reddit's debt-free, DocuSign, Pinterest. Hey, just because they're debt-free doesn't mean they'll do good. Like, look at Pinterest. They're kind of at their IPO price, but yeah. Look at the Opera GX browser. Has anyone heard of the Opera GX browser? I keep on getting like ads for it. Well, their stock is publicly traded. They're a $1 billion company. I didn't know that. That's actually a play. Like if Google has to sell Google Chrome, I heard that Opera browser could be like a play. I don't know. Anyway, let's keep going here. Someone said Google. Yeah, we'll look at Google as well. Yeah, no problem, Eric. So yeah, here's Google stock right here. This is, huge advertising business right here. They own Android, they own YouTube. Look at the net income. They made 26 billion of net income just in the most recent quarter. Yeah, hey, this is Mumu. Yeah, Eli, if you want to get this platform, it's in the link tree in my bio. First link there. Yeah, Google made 26 billion of net income in the most recent quarter. They're growing their net margins. They have their own quantum chip. Like, look at just the Google Cloud business. Google Cloud is up incredibly, and they report earnings tomorrow. So tomorrow we will get Google earnings, and so that'll be really fun to watch. The valuation is so low on Google. Oh yeah, Adrian, let's check out SoFi Technologies. So SoFi, yeah, dude, I do own this company as well. Not much of them, but I love the growth here. So check this out. If you go to their lending business, the lending revenue is up 18% year over year. So nice growth. Yo, KC, thanks for the rose there, KC. I really appreciate you. If you got a stock you want me to look at, let me know. I got you. So the lending revenue is up 18, and look at the financial services business. This is the most impressive part. It is up 85% year over year, literally to a new record. So the financial services are growing incredibly, and so is their bottom line. If we zoom out, this company, they used to lose a lot of money. They were burning net income every quarter. Now they're making net income every quarter. Yo, Jake, this is a brokerage right here. Yeah, if you want to get this brokerage, it's in the link tree in my bio. First link there. It's called Momo. Yeah, you can track like super investors' portfolios and stuff. Like Warren Buffett, he's chilling on records amount of cash, but his largest holding is Apple. He has the high yielding stock. So I wanted to come here because someone was saying, oh no, it wasn't Chevron, it was Exxon. So yeah, Chevron and Exxon are the two main oil stocks right here. And not only do you get the nice dividend yield with these oil stocks, but they've had some decent stock price appreciation. So here's the dividend. So even if you buy Exxon right now, you get a 3.5% dividend yield. So that's really nice. And if we go to the net income right here, it's down year over year, but they're still making like 8-9 billion a quarter of bottom line after tax profit. So they do a lot of dividends and share buybacks. So that's what's cool about them. Let's see. What about WB? What's WB? I've not heard of this stock before. So this is an ADR. So this is a Chinese company. Fortunately, the stock's at like an all-time low. They're only worth $2 billion. So monthly active users. Let's see. 590 million. Wow, they got a lot of active users. What did they? I don't know what they do, but yikes! Look at the net income. It looks like the net income just collapsed to just 12 million. So looks like they're losing their net margins. That's probably why the stock has fallen so much. But cool. Yeah, oil stocks stable. Yeah, Chevron's pretty cool. Love your videos. Can you look at FSK? What up, Dan? Of course, appreciate you. FSK. I think that's a BDC, right? What's the hey? This is a brokerage IG. If you want to get this brokerage, link tree in bio. First link. It's called Momo. So here's FSK Capital. So this company is one of the few companies that literally have to, by law, pay out most of their income in the form of a dividend. So this 14% dividend yield that they have is actually sustainable because they're a BDC. So that's what's pretty cool about this company right here. So you mainly just buy it. Here's a BDC ETF. You might find this one cool, Dan. This is BIZD. They own a bunch of BDCs right here. I think FSK is one of the top holdings in this ETF as well. So yeah, they own like Ares Capital, Main Street Capital. Yeah, look, FSK, 3.7% of the ETF. So yeah, I like the BDCs to maximize the dividend income. So let's see. Oh, what up, Matthias? Or what up, Mattheus? I'm sorry if I'm pronouncing your name wrong. He said NU Holdings. Yo, I love this stock. This is a crypto bank out of Brazil. So check this out. The most impressive part about this company is the growth. And they're a crypto bank in South America, and that's where crypto's the most popular because their currency isn't too good. Yo, invested '09. Yo, thank you so much for the lightning bolt there. And yo, KC, we'll check out Marvel stock too. Thanks again for the rose. But look at the net income on NU. It was up 53% to 500 million just in the most recent quarter. Also, Berkshire Hathaway and Warren Buffett do own a little bit of NU holdings. So if Warren Buffett and Berkshire Hathaway's buying it, why not? Hey, I do just love the growth there. Yeah, let's look at Marvel. Is that MRVL? Are you talking about Marvel Technology? Um, let's see. Well, I'll be quick about this one. The best part about this stock is the fact that they finally made net income. In the most recent quarter, they made 200 million. If we zoom out, they were just losing money every quarter. So as long as they can keep up that net income positivity, this looks great. They pay a dividend, so they really need to make net income. I don't know how they were paying a dividend while they were losing net income for many years, but hey, they're finally making net income. Yeah, no problem, Dan. Appreciate you. Yeah, I'm reading both the YouTube and TikTok chat. We're streaming on both platforms. Um, let's see. Eli Lilly. Yeah, thanks again, invested dude. I love Eli Lilly right here. My one of my top healthcare favorite stocks. They just gapped up right here because they made a weight loss pill. Like with Ozempic, you have to take like a needle, but with this, you can take a pill now. And look at this. This is what's so impressive. I'll be quick. They sell a bunch of different prescriptions. Like look at just Mounjaro, for example. I don't believe it. In 2023, the sales were 900 million. Now it's 3.5 billion just in the most recent quarter. Incredible growth. If we go to like Zepbound, this is their weight loss prescription. Their Zepbound went from 175 to 1.9 billion in just 1 year. That's incredible growth. So they can just make these prescriptions and they just sell like crazy. So anyway, and they print net income, dude. They make 4 or 5 billion net income a quarter. So I do really like Eli Lilly. Here's my most recent healthcare stock, by the way. Yeah, here's my main taxable account. We own 4 shares of United Health Group. This is my most recent purchase. This stock is down bad the past week. Check that out. They're down 25% the past week, but we are up 1.69% on them because I bought them yesterday. Um, they haven't moved as much as the market because they reported some not so great guidance, but that's my most recent purchase. I do like United Health. I'll be super quick about United Health and why I bought them. We use their Optum RX service, so we're kind of like a customer, and the dividend is super nice. You have a 1.9% dividend, so a nearly 2% dividend yield. The PE ratio is an 18, so they're trading at 18 times net income. And we literally use their Optum RX business. Look at these Optum RX sales; it's up 15% year over year. I mean, this is some incredible growth. So anyway, that's why I bought UNH. You really want to look at the operating profit. If you go to net income, they had this one loss because of a lawsuit, but they literally make 8-9 billion of net income a quarter. So anyway, I do like UNH. Oh, here's a cool ETF right here. Yeah, QQQM. I would way rather buy QQQM than QQQ because this one is the exact same thing as QQQ, but with a lower expense ratio. It's the same NASDAQ 100 strategy. And yeah, breaks your money up into the NASDAQ 100, which is Apple, Microsoft, Nvidia, Amazon. Then it's like Costco, Netflix. Has anyone seen Netflix recently? Netflix is kind of seen as like a tariff proof stock. The company's at an all time high right now. Their premium subscribers just keep on growing. It went from 282 million to 301 million premium subscribers. They literally make so much money, literally 2 to 3 billion a quarter. So Netflix is deserves to be at all-time highs. I will look into UNH. Hey, yeah. Again, none of this is financial advice, of course. Look at like this stock right here, Perion Network. You could lose a lot of money. So always do your own research. Yeah, and I don't sell anything either. I don't have like a course book, Discord, WhatsApp, Telegram. I don't got none of that. Yo, what up, Zone 2 Day? Yo, thanks, or Zone 2 all day. Thank you so much for the rose there. I hope I can find this company for you. I can't really look at these weird stocks. Wait, FTT. I will look it up for you, but I don't know if I'll be able to find it. Yeah, unfortunately, I can't look at this stock. Like I see articles about it, but unfortunately, this app won't let me look at that stock. So if you got another stock you want to look at, let me know. I really appreciate the gifts there. What are some smaller stocks you're looking at? Yo, actually, I just made a YouTube video about this. Three small cap stocks that I find really attractive right here. Ooh, um, hmm. Here, let me. This is my risk on portfolio right here. Yo, we own some. Yo, this one isn't really a small cap stocky, but Reddit is such a great company. Literally, sales are up to a new record, the most monster growth, 71% revenue growth, no debt. But let me see. I'll show you my like risky stocks right here. Like AM, but they're not really a small. I don't like to really buy the small cap stocks, to be honest with you. Anyway, like I have some SoFi, I got some Robinhood, Super Micro. Oh, Dave, yo, this is one of the main stocks I went over. I would get, again, not financial advice. I really like Dave. They're only a $1 billion company. Oh, and InnoData as well. If we go to my Roth, I have 10 shares of InnoData. This is a $900 million company. Incredible growth. I think they'll just keep on winning. Again, not financial advice. Uh, Yo, what up? Let's see. LRCX, is that Lamb Research? Let's check it out. LRCX. What time do you usually go live? I usually go live around this time every day. Um, but I stream twice a day. So yeah, if y'all wanted the follow button, I go live every day, twice a day. Uh, and I'm streaming on YouTube as well. I'm streaming on both YouTube and TikTok right now. So I'd appreciate if y'all would head over to the YouTube stream. But here's Lamb Research. This is kind of like Nvidia's competitor. What I love about this stock is the yield. You get a 1.3% dividend yield, and the payout ratio is only at 27%. They have a lot of room to raise the dividend, and the PE is 20. So they're trading at 20 times net income, which is very fair. And look at that. They make like literally just around $1 billion every quarter. So nice. I got on Dog with I'm Robin and I'm trying to learn. Oh, that's what's up. Yo, that's a crypto. I'd be careful with crypto, but yeah, or with Dog with what coin? Yeah, I don't know if I'd buy that one, but it's nice that you're starting investing. Uh, since there are a lot of good companies yet there. Yeah, Eli, I just look for companies with great growing fundamentals. Like I'm definitely not always right, but I think like just Amazon, Google, Meta, these will be great winners in the long run. Yo, Amphenol Group, this company reported earnings today. I'm glad I own this stock. They're up 10%. They beat on every metric, so it was very nice. Uh, Yo, you Wiz, if you got a stock you want me to look at, let me know. I got you. So let's see. Do you sell options? I usually don't sell options. I'd like to buy in old shares. Yo, Adrian said Hood. I got 7 shares. Yo, I also got probably like 7 shares. I got like 5 shares. Yeah, I have 5 shares of Robinhood stock right here. I took a lot of profits on this company, but I still own a couple shares left. The best part about this brokerage, or the stocks, this is a brokerage. This is Robinhood right here. So I am a customer, and look at this right here. This is the best part. The revenue was a billion, up 115%. Incredible growth of their sales, and they're now making net income. If we zoom out, no one took Robinhood serious. Remember, they were literally at one point losing like a billion a quarter. Like it was crazy, but now they're finally turning a profit. So congrats to Robinhood. You know, they have the Robinhood Gold. It's really doing a lot for their bottom line. I think if you're if you remove like the funds owned to customers, they're pretty much a debt-free company as well with lots of cash. Anyway, let's keep looking here at some more stocks. Yeah, if you guys got any stocks you want to look at, let me know. I'm reading both the YouTube and the TikTok chat. Yo, TP said TNXP. So, what is this? Tonix Pharmaceuticals. So yeah, this company, I'd really avoid this one, my friend. So they're only $100 million and the stock's at an all-time low. So this isn't the kind of company that I'd want to own. Oh, sorry there. All right. So remember, the whole company's worth 110 million, and just in the most recent quarter, they lost 22 million. And look, this is like a classic like worst company of all time to buy. The sales are 2 million and they lost 22 million, which is 20% of the company just in one quarter. If you look at the add up the past 4 quarters, they've lost their entire market cap. So anyway, please don't buy that one in my opinion. Again, now financial advice here. What would you invest in for the short term? I don't really short-term swing trade stuff. Like everything I buy, I usually just buy and hold it for the long run. But UNH could be a potential good one. I think. Well, again, these are like buy and hold forever kind of companies. Yeah, I don't know. Let's see. Amazon, yeah, Lucas, yeah, Amazon. I've been buying the dip on them like crazy. I'll be super quick about this one because we've looked at them a few times. But just the net income on Amazon, they made 20 billion. They made a record amount of net income in the most recent quarter. That's why I love them. So a record amount of net income. And look at this, the AWS business, their Amazon Web Services, all high margin for them. It's up literally to a new record, up 19% year over year. So Amazon's just an incredible growth company. So that's why I've kind of been buying them recently. Um, oh, wait, hold on. Someone said AAL. So this is an airline stock. So this is American Airlines. A lot of people like aren't flying to America right now. I heard that's going to hurt the airlines. But look, I just don't love the airlines just as an investment. They're federally regulated, they're low margin, and in a recession, they get smoked. No one will just fly. And look at this right here. The net income is just so inconsistent, so choppy. Like sometimes they make money, sometimes they lose money. So I honestly, for me, I'm just avoiding the airlines. Yeah. If I was gonna buy an airline, if I had to, I would buy Delta Airlines if I had to buy one. They have the best fundamentals for an airline, but still not great. Or honestly, I'd rather buy one of the airplane manufacturers like an ERJ and Embraer. This company is impressive, ERJ. They make these jet engines that, yeah, look, commercial aviation. Let's see how the business is doing. I mean, I just know they've had some incredible growth recently. Yeah, and they have great margins. Let's see here. Wingstop, the ticker symbol is Wing. Yo, this is a really great company. Yo, Obama boys. Yeah, we'll check out that stock as well. Appreciate y'all being here. Yeah, this is Wingstop right here. Unfortunately, the stock is not done too good, but it's well up from its 2019 price. And here's what's so impressive about Wingstop. If we go to like here, look, royalty revenue is 45% of the business. So the franchises pay royalties to the parent company. That's 45% of the revenue. And then they have their advertising fees, and then they have their company-owned stores. So very diversified company, but I love the growth here. Revenue was up 27%. Net income was up 42%. So that means they're growing their net margins. So their net margins grew 10%. Cash from operations fell to 7 million. Not sure what happened there. But anyway, the net income looks great there. The net income growth. I love the growth there. So let's see. JNVR stock. Let's check this one out. Genover. I haven't heard of this one before, but check them out. They've done great the past couple of days or weeks here. Congrats if you own them. They're only an $80 million company, but unfortunately, I don't know the news here. Like this was after they reported earnings, so there was some really good news here that fundamentally changed the stock. And without that context, I don't really, uh, unfortunately, I can't really give some real analysis on this one. Looks like they're debt free. Uh, they're losing net income. The sales are nothing, but there must have been some good news. Like maybe they got FDA approved to finally sell a product or something. Should I buy Powell right now? Hey, not financial advice here. That's a stock that I do own. Honestly, they're the valuation looks really nice on this company, but it's tough to buy them after they're already up 8% on the day. They're a debt-free company. This company has no debt. The revenue's up 24, the net income's up 44, so they're just growing their net margin as well. It's so impressive. So, I really like Powell Industries. They have a backlog of 1.3 billion of orders. So let's see. CubeSmart update. Hey, yo, that's my high. Oh, yo, that's Amphenol Group, but CubeSmart. This is my highest yielding dividend stock right here. So, this company has a again, just my opinion. They have a sustainable 5.2% dividend yield. So, that's why I like CubeSmart. And they're a real estate investment trust. They're a REIT. They own self storage properties. So that's why their yield is so high. They're especially taxed. Let's see. Um, let's see. What's a good penny today? Yo, a stock that has a really low market cap, in my opinion, I really like is Dave. Ticker symbol Dave. They're only a $1 billion company, but I'll show you my favorite small cap stock, and I do own this one, not much of it. But this is INOD. This is InnoData. I actually own this one in my Roth IRA, so I'm not going to sell this one, but I have 10 shares of INOD. This is InnoData. Again, not much. I just got 10 shares, but here's what's so impressive. It impressed me so much I had to buy them. Look at their digital data solutions revenue. It is up 161% year over year. So this is incredible. incredible growth, as well as the agility revenue. That's up 25% year over year. So I'm just loving the growth here on them. And they have no net debt, and their top customers are Amazon, Google, Microsoft, and Meta. Those are all their top customers. Five of the Magnificent Seven. So anyway. Oh yeah, here's a cool one. TEM, Tempest AI. This company was bought by Nancy Pelosi's husband. Oh, look at that. This brokerage is telling me there's a bullish continuation wedge, and the rise probability is a 95% chance. So I guess that's cool. But I like looking at the fundamentals. So let's check this out. They're kind of in a niche business. They do genomics. So look at the growth here, though. That's the best part. The sales are up 30% year over year. So that's some incredible growth. And also look at the data and services business. This is really impressive. It is up 45% year over year, also to a new record. So that's the good news about Tempest AI. So yeah. Yeah, we can look at Nancy Pelosi's portfolio. Yeah, Nancy Pelosi's husband just bought a lot of that. Yeah, here's Nancy's portfolio. She's been buying some stuff like PayPal, Comcast, Disney. So yeah. Nvidia, please. Hey, that's like one of Nancy's largest holdings. Nvidia is 5% of her portfolio. So I'll give you a quick analysis on Nvidia right here. So I like this one. Look at their PC GPU market share. Nvidia obviously has an 18% GPU market share. They partner with WeRide and GM. So they have automotive business. They kind of compete with Tesla with WeRide. The automotive revenue is at an all-time high. Here's why Nvidia just deserves all the hype. Their after-tax profit was 22 billion. I mean, that's so impressive. It's up 80%. They grew their net income 80%. Like, it's still growing as well. So until the growth rate slows from the net income, I mean, Nvidia is such a great company to just buy and hold for the long run. Like, their chips are so valuable that America doesn't want China to have them. Isn't that crazy? So you own any PepsiCo? What up, Elvin? Yo, I actually do not own any Pepsi, but I do really like the company right here. They have a nice yield now. Pepsi nearly has a 4% dividend yield, which is crazy. So, 4% dividend yield, and check this out. If you go to the net income right here, they literally just make like 2 to 3 billion of net income a quarter. And here's what's weird: like Pepsi is not at all-time highs right now. They're like kind of well off all-time highs. But if we go to like a Coca-Cola, for example, Coca-Cola actually is at an all-time high right now. So that's what's weird. I don't know why they're moving so differently, but yeah, the Pepsi has a really nice yield. So let's see. What app is this? Oh yeah, if you want to get this app, it's in the link tree in my bio. It's the very first link there. It's called Moomoo. Here's Plug Power. Here's a company I would absolutely avoid. I feel bad if you own this stock right here. Oh yeah, we'll look at Dutch Bros as well. Yeah, they're a cool company. Here's Plug Power. Remember this. The whole company is worth $800 million. So the whole company is worth 800 million, and just in the past 3 months, they have lost $1.4 billion. So this company should just slowly keep on bleeding down to all-time lows. They're going bankrupt, unfortunately. So yeah, I feel bad if you own that stock. So Dutch Bros, I think, yeah, ticker symbol Bros. So yeah, check this out right here. This is like a Starbucks competitor. They own like restaurants. Yeah, here's their company operated shops, and look at this growth here. In 2022 or 2020, it was 240 million. Now it's 1.17 billion. So yeah, 38% year over year growth. For a restaurant in this environment to grow that much is really impressive. So we can also look at the net income. Yeah, they're making net income every single quarter. Yeah, the revenue is just really impressive. What about free cash flow? Yeah, they're making free cash flow now. So yeah, let's see. Uh, yeah, pizza. Yeah, they're not going bankrupt, but they lost their growth, unfortunately. Papa John's Pizza. Let's see. AMD and oh wait, hold on. I want to look at SCHD. Someone said SCHD. This is the dividend ETF. It's like a high yielding dividend ETF. They have a 4% dividend yield. So you get 1% of your money back every quarter. And look at the top holdings. Top holdings Coca-Cola. Then it's Verizon, Conoco, a lot of Warren Buffett stocks like Chevron, 4%. So yeah, SCHD. Um, I'd like them as like a dividend play. Yo, what up, Ulysses? Good to see you, friend. Yeah, dude, markets are doing great today. We're up 5%, and we get some earnings after the bell. Uh, Goofy said PFE. So this is Pfizer right here. This is a healthcare company. They own like Viagra and stuff. But unfortunately, this was a huge beneficiary from the pandemic. And well, we're not in the pandemic, so the stock hasn't done too good. Mainly, they're a dividend play. You get a 7.5% dividend. but the payout ratio is 120%. So the payout ratio might be a little high. Yo, Ulysses, thanks so much for the roses and the GGs. I really appreciate you, dude. Yeah, if you got a stock you want to look at, let me know. I got you. And I'll show you my Robinhood portfolio. I'll show you some of my new purchases. And look at this right here. Pfizer, they're we just want to see them make net income every quarter. Sometimes they were losing money back here, like they lost 3 billion, 2 billion. So I just want to see them consistently make net income. And actually, if you average out the 4 quarters, they're making like 2 billion of net income a quarter. So it's really not bad. But the stock, unfortunately, is just like at an all-time low. Who got earnings today? Yo, two of my stocks got earnings today. Yeah, here's my main account. By the way, this is my main taxable account, my Robinhood portfolio. There are two stocks you probably never heard of before. CSL right here. This company reports earnings today, and also United Rentals. I got 4 shares of them. Actually, I'll show you the earnings hub right here. So you know what? I'll show you what companies report earnings today. So we go to the earnings calendar. I'll search it by watch list. So yeah, Mr. Cooper reports. Oh, they reported in the pre-market. How'd they do? Their stock's done great. Vertiv Holdings. So yeah. Oh, they reported earnings this morning. Okay. So anyway, yeah. We also had Amphenol Group report earnings this morning. They're up 10%. They had amazing earnings. But yeah, tomorrow we get Google, Comcast. Actually, let me remove my watch list. So yeah, we get IBM, AT&T, Texas Instruments. Ooh, Texas Instruments. That'll be an interesting one. NextEra Energy, Boeing. Dude, China just rejected a bunch of Boeing airplanes because of the tariffs. All right, let's see. Are you holding a significant portion of your cash? Yeah, not too much. Like if you look in the middle of my screen right here, I actually have a little bit more. I have $699 of cash on hand. So I am ready to buy the dip if it comes. So let's see. What up? Jay Duke said BX stock. What is this one? This is Blackstone. This is an asset manager. So yeah, they're kind of like a BlackRock. So check this out right here. They're very diversified. Yeah, they're in private equity, they're in real estate, credit and insurance. How's that doing? Wow, look at their credit and insurance business. I mean, this is just one segment of their revenue. It's doing great. But let's check out the revenue right here. So this might be why the stock is like kind of well off its peak right here. The sales are down 10%. The net income was down 24. I guess it was a tough quarter to compare to, but honestly, the stock looks pretty good. Let's see. Lucid, yo, this is a company, again, not financial advice here. I would avoid this stock right here. I feel bad if you own it because the stock is at like an all-time low right now. And that's because this company is diluting you and they're losing a lot of money. It's really unfortunate, but check this out. This is just not the kind of company I want to own. They're losing so much money every quarter, like 500 million plus of net income a quarter. And they're diluting you. So I would just be super careful with Lucid. Yo, invested '09. Yo, thanks for the lightning bolt. Thanks for the gifts there, man. I appreciate that. See, I'd want to see Lucid make some net income before I could even like consider them. Like they're getting taken over by BYD is destroying them, taking all their market share, and yeah, BYD is doing great. Someone said TIGR. It's the Asian Robinhood. So they must be a brokerage then. So yeah, they're a fintech. Yep, that makes sense. So the stock hasn't done too good. It's lower than it was in 2019. But let's check out the fundamentals here. Let's see where the revenue comes from. So yeah, look at that. I noticed none of the revenue, or 26% of the revenue comes from the U.S. Yo, George Bailey, thanks so much for the 21 roses. I really appreciate that, dude. If you got a stock you want me to look at, let me know, George. I appreciate you. But yeah, most of the revenue comes from their interest income. Yeah, that's up 21% year over year. That's some really nice. Yeah, look at their interest income. That's incredible growth. Their commissions down 14. So it's really their interest revenue that's making them a lot of money. So yeah, they're not huge though. The sales are up, wow, 77%, but they made 28 million of net income. Anyway, yo, he said Google stock. Yeah, dude, I love Google. This is a great one to just buy and hold forever. No reason to ever sell Google. Just like hold them for the long run. They now pay a dividend. Like the fact that they pay a dividend now is so great. They're trading at 19 times net income. Historically, that's a very cheap valuation for Google. And the business is still growing. That's the crazy part. The net income's up 28%. They just grew their margin. Sales are up 11, net income's up 28, so that means they grew their margin 15%. I mean, it's just so impressive. They own Android, YouTube, the Google Cloud, they have their own quantum chip, Waymo. Google is really great. I might be biased because I own them, but I own them for a reason. Yeah, George, dude, this is Take Two right here. You're right. They own Rockstar Games, and look, this stock is doing great. Congrats if you own them. And they just confirmed that in 2025 they're going to release GTA 6, so it's supposed to bring a ton of revenue for Take Two. Um, I can't wait to play GTA 6. That'll be very interesting to see. And on that, the stock's at an all-time high. They also own like Red Dead Redemption. I think they own like The Sims as well, some other games like that. But yeah, Rockstar Games, pretty cool stock. Oh, yo, George said FI. So, are you talking about Fiserv? Wow, this stock's at an all-time high. I haven't looked at this company in a long time. They're a $120 billion company, so they're a huge company, and they don't pay a dividend. Let's see. So they're in merchant and financial. How's the merchant revenue doing? So it's up 10% year over year. Not bad. What about the financial? It's up 3%. Not crazy growth, but yeah, revenue's up 6%. Net income's up 6% as well. So yeah, they're making like 800, 900 million of net income every quarter. So yeah, they're pretty all right. We are currently getting crushed on Google. I don't get it. Yeah, dude, I feel you. If I go to my Google position right here, I think I might still be down on them. Yeah, we're down 3.25% all time on them. Um, and look at them year to date. Google is down 17% year to date, but that's why I think the risk to reward looks pretty fair on them. Oh yeah, we'll look at United Rentals, Ulysses. Yeah, so here's my account. United Rentals is reporting earnings after the bell, and I am down 0.72%. So this should be quite interesting to see what happens with United Rentals. I'll show you what you just rent things from them, like you rent forklifts, trucks. They trade at a low valuation, 15 times net income. You get a nice dividend, a 1% dividend yield. The payout ratio is super low, only a 16% payout ratio. General rentals, specialty rentals. They just acquired Yak, which is like a specialty niche mat company that protects the environment. Like the specialty revenue is up 31% year over year, so some nice growth. They just make like 600, 700 million of net income a quarter. It's all reoccurring. I like United Rentals. Again, I might be biased, but they're like a dividend growth company. Will Nvidia continue to fly? I hope so. They're up 5% on the day. AMD as well. You know, everything's growing. Their GPU market share is growing, the automotive, the data center, like their compute and networking business. This is why they deserve the hype. It's up 101%. Incredible growth on Nvidia. And Nvidia is so big. Nvidia is such a big company that they literally own part of some individual companies. Like here's Nvidia's portfolio right here. Nvidia owns part of ARM, they own part of APLD and WeRide. Look at this pump and dump right here. Nvidia takes a stake into WeRide, stock goes to $40, and now they're at like a new 52-week low. $8.30. How do you feel about options? Or yeah, options are all right. Like selling calls, selling puts are I like doing that, but I mainly just like to buy and hold shares of great companies. Just like buy and hold for the long run. Let's see. Google earnings a buy. Hey, yeah, I do think Google will be very interesting on earnings. Yo, someone said Rivian stock. So the largest shareholder of Rivian is actually Amazon. So yeah, if we go to shareholders right here, yeah, Amazon owns 15% of the company. So I have some exposure through Amazon, but I don't like buying this company individually because they're burning a lot of money right now. The trend is getting a little better though. Like they only lost 750 million in the most recent quarter, but still I don't like those net income losses. They're losing like 4 billion a year, and the whole company's worth 13 billion. That's kind of scary. They lose 30% of the company a year. What app is? Oh yeah, if you want to get this app, it's in the link tree in my bio. It's the first link there. It's actually a brokerage. 300,000 vehicles to come. Yeah, dude, Amazon is like a great partnership to have. So yeah, here's my Amazon position right here. I've been buying the dip on Amazon. I remember Amazon is taking EPS and net income losses because of Rivian because they own part of them. Amazon kind of blamed some of the losses back in the day on Rivian. It was funny. But yeah, I want to see Rivian get net income positive, but they're pretty all right. Um, yeah, no problem. So what is IHG? I haven't heard of this one before. So this is a hotel stock, Intercontinental Hotels. Wow, the stock's done pretty good, for a hotel real estate company. Let's see, you get a 1.5% dividend yield. Not bad. What about the sales? So the sales are up 7, but the net income is down 36. It looks like it was kind of a one-time adjustment, but still not great. Cash from operations was down 100 million. It's an all right company. I'd probably rather buy a Hilton and HLT, but congrats if you own them. The stock's done pretty good. Let's see. What's a good entry price for Amazon? You know, under 180, not financial advice. You get in lower than I did. Again, don't listen or follow to me. You could lose a lot of money. And hey, I don't sell anything, by the way. I don't have a course book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. Yo, Ulysses, thanks again for the 25 roses. I really appreciate you, man. Yeah, if you got a stock you want me to look at, let me know. Oh, here's a cool one. Someone said RY CEY. This is Rolls Royce. They're actually not an American company, but look at Rolls Royce right here. The stock is pretty close to an all time high. A lot of people know Rolls Royce for the cars, but they mainly may make like jet engines. Like, look, civil aerospace. They're in the defense. They're like an aerospace and defense company, which is pretty cool. And look at the net income. Full year 2024, they made 3 billion of net income. So I can see why the stock's done so good. They kind of got their growth back. Let's see. What should I invest in with $250? Hey, not financial advice. I would just buy like the VOO, the S&P 500. With most of that, then I'd maybe play around with a little bit of individual company. So someone said IREN. This is a company that they're worth $1.4 billion. So the whole company's worth 1.4 billion. And check this out right here. If we look at the revenue, this is what impressed me. The revenue was up 176%. So that's an incredible growth rate. And they even made net income that same quarter. They made 18 million of net income. So that's what was really impressive. The assets are growing like crazy. So this one interests me. I don't know why the stock has fallen so much. I need to do some more research. Like, they could be diluting you a bunch, but at first glance, the fundamentals I really like. Um, oh, a Google call. Yo, I'd rather just buy Google shares, but hey, if I was gonna buy a Google call, I'd go with some of the longer term expirations. But yeah, because I don't mind just holding the stock. You also get a growing dividend. Yeah, I just like I mainly like shares. I probably sound so boring, but I just love buying shares of companies. Let's see. TOI, is that a stock? I haven't heard of them. Oncology Institute. So wow, look at them. If we kind of zoom in the past, like, whoa, look at that crazy stock price appreciation. How much are they worth? Oh, they're not worth much. They're only worth $250 million. So they do patient services, and that's down 10%. Oh, and they're in this industry. I don't think I can say that word, but whoa, look at the growth of this business. That is incredible. That's probably why the stock has seen so much growth. I mean, that revenue growth. So yeah, if we go to revenue, it's up 16% blended. They're still losing net income right now, like they're losing 10 million a quarter, but that's not too much. It's not too bad. They're, they're all right. They're okay. Call options are the URA ETF. Is that the uranium ETF? So yeah, this is the global X uranium ETF that powers like nuclear energy stocks. I should like Cameco should be the largest holding. Yeah, Cameco. This is my favorite individual uranium stock. Um, What's good, Nathan? How you feel about Cube? Oh yeah, yo, Kyber. Yes, sir. Let's check out Cube right here. So yeah, this is a cool nuclear energy. Nuclear energy facilities are powered by uranium. So yeah, check this out. If we head over to our this is Amphenol Group. They did good today, but CubeSmart right here is my highest yielding dividend stock. So this is the highest yielding stock that I own. And check this out. They have a sustainable 5.2% dividend yield. So that's what I like about them. And you really want to look at the cash from operations, the core FFO. It was up 16% year over year. They're acquiring new companies. I just think this company, in my opinion, has a safe and sustainable 5% plus dividend yield. But I don't expect to outperform the market in the long run. Like, they're a real estate investment trust. They're a REIT. They own self storage. Self storage is known to be recession resistant. So, yeah, I do really like Cube. I'm just holding that one. What's up, Kyber? Appreciate y'all being here. Yeah, I'm streaming on both YouTube and TikTok right now. If y'all want to support me, please head over to my YouTube channel. It's called Nathan Robert. My YouTube channel is also in the link tree in my bio. Let's see, yo, BOO. This I can't find this company, or I'll look it up for you. But LDDFF. Yeah, I don't know. Can't find that company. That's a weird ticker symbol. If you got another stock though, let me know. So let's see. How do you feel about American Express and Microsoft? Yeah, dude. Let's look at American Express first, because that's a classic Warren Buffett stock. If you go to Warren Buffett's portfolio, his second largest holding is American Express. That's 14% of his portfolio. So Warren Buffett owns this one for a reason. Check this out. You get a 1.1% dividend yield, and the payout ratio is only at 19%. So you actually have a lot of room to raise the dividend. Look at the valuation. They're trading at 18 times net income. That's a super fair, super, you know, fair valuation. Yeah. And yeah, if we look at the net income, they're making 2 to 3 billion of net income a quarter. So yeah, they definitely can raise their dividend if they wanted to. So yeah, AXP, they're a really cool stock. You know, let's see. Does he own any Microsoft? No, he owns Apple. I think Nancy Pelosi owns some Microsoft. Let's see. Yeah, 10% of her portfolio is in Microsoft. So yeah, this is a great hardware and software company. You know, you just can't go wrong buying Microsoft. We can see their premium subs. They have 82.5 million. They have three main segments of business, you know, productivity, intelligent cloud, and personal. Like, look at their intelligent cloud business. You know, this is like really impressive growth. You know, they have the Microsoft Azure cloud. So anyway, Microsoft's a great just buy and hold for the long run. You get they're making 25 billion of net income just in the most recent quarter. So yeah, they're a great buy. Do you still play Rust? Hey, sometimes. You know, I miss playing Rust, the OG. Oh, yo, what up? Rich Tech Robotics right here. So this is a robotics stock that, to be honest with you, I just like to give you my honest thoughts. I don't really like Rich Tech Robotics right here. So check this out. I'll show you why I don't like them. You know, they're only a $200 million company. So they're worth $200 million, and look at that. This company pretty much doesn't exist. You know, they have $1 million of revenue a quarter, so they're doing a million of sales, and they're losing millions every quarter. So in my opinion, this is one I don't like. They have a great balance sheet though. They have no debt and a bunch of cash because they've been issuing shares, diluting you. But I just don't they don't have any sales. Like, I just can't buy that one. But if I was gonna buy a robotics company, first off, Amazon is a huge robotics company. But I like SYM. This is Symbotic right here, and this one actually has incredible sales growth. You know, they actually have sales. The sales are up 35% year over year to 500 million, but they're still losing net income. You know, they're kind of like Rich Tech Robotics. They're still a money losing company. But if I was gonna buy one, I'd probably rather buy an SYM. Yeah, hopefully that was helpful there. Again, not financial advice here. Hopefully you can just find a stock or two you can add to your watch list. Like here, for example, is my debt-free watch list. Every stock in here has no debt. You've probably heard of some of these before, like Yelp has no debt, Pinterest, DocuSign, Reddit, Duolingo. You know what? I'll be super quick. I want to tell you why Duolingo is really heavily on my watch list. You won't believe this. I love subscription model companies. Look at their subscription business right here. It is up 50% year over year, literally to a new record. It just hits a new record every single quarter. So that's what's so impressive about Duolingo. I just really like them. What app? Oh yeah, yeah, yeah. If you want to get this app, it's in the link tree in my bio. It's the first link there. It's called Moomoo. Oh, Lowe's, LOW. Yeah, so Lowe's is a great like just store. I don't know what to call it, like a hardware store. I love Lowe's because check this out. The PE is very fair. They're trading at 17 times net income. And look at the dividend. You get a 2% qualified dividend with Lowe's, and they raise their dividend every year. In 2021, you got $2. Now you get $4.50 back in a dividend, which is great. The PE is fair, and they can easily afford it. Look, they're making 1 to 2 billion of net income every quarter. Home Depot is another one that I really like. Ticker symbol HD. Oh yeah, we can look at realty income as well. So that's ticker symbol O, um, ticker symbol O right here. This company actually pays a monthly dividend. Unfortunately, if we go to 2019, the stock is lower than it was in 2019. So you're not going to outperform the market owning this kind of company. But what you do get is a sustainable monthly dividend. You get a 5.5% dividend yield, and they can easily afford it. And they're a REIT. They do triple net leases. They're a REIT. I bought my first house recently, and I've been to Home Depot too many times. Hey, Adrian, if you're going to Home Depot, you know, buy the stock too. Like, I try to, again, not financial advice, like invest in what you know, like, or invest in what you use. Like, I use Apple on a daily basis. I use Meta, like Instagram and Facebook. So in Home Depot, I go to McDonald's all the time. I go to Kroger. Like, there's this McDonald's and Kroger next to my house, and it's always packed. So I'm like, hey, why not buy some McDonald's stock? I got 13 shares in them, and also I've been loaded up on some Kroger. I don't got much of them, just 5 shares, but yeah, we got some Kroger stock as well. So anyway, let's see. Oh, SoundHound AI, yeah. So this company's another really risky one. There's some really good news, but there's also some really bad news about this stock right here. So here's the good news first, and this is super impressive. Look at their subscription revenue growth. You know, I love subscription model companies. It's all reoccurring revenue. Check this out. The revenue was 600,000 a year ago. Now it's 30 million. You know, that's an incredible growth of their subscription revenue. So what's it going to be this time next year at this growth rate? I got 63 Kroger. Yo, that's what's up. Yo, Kroger hit an all-time high yesterday. You must be happy. Oh, and then if we look at their royalty revenue, this was the unfortunate part. Their royalty revenue collapsed. This is high margin for them. It fell 73% year over year. So they lost the growth of that. And they also just lost a bunch of money. I don't know how they did this, but they lost 250 million of net income. So I want to see them get closer to net income positivity. But I love that. Oh, I work for Lowe's and they match the IRA contributions 3%. Yo, that's awesome, dude. I would max out their contributions every year. That's awesome. Uh, so here's Invesco right here. Yeah, here's IVZ. This company owns the QQQ. So if you heard of the QQQ ETF, this company like collects the fees whenever you buy that ETF. So the stock hasn't done as well as the QQQs, but look, yeah, they're making like 200 million of net income a quarter. They must have good margins, but yeah, they're making a lot of net income. They're just a profitable company. Whoa, I didn't even realize this was a dividend play. You get a 6% dividend yield with this company. Wow. Unfortunately, the stock just hasn't done too good. Like since in 2010, the stock hasn't moved. So if you bought this stock in 2010, you'd be down on the position. How are Reddit's financials? Dude, Reddit has phenomenal fundamentals. And again, I do own this one, so I might be biased here. You know what? I'll be super quick about this one. But yeah, I own 4 shares, not much of Reddit. But here's the fundamentals: no debt. Reddit is a debt-free company with 1.9 billion of cash. And just forget the name Reddit, because it kind of has like a meme reputation. But look at this sales growth. I judge it off the financials, and the financials are incredible. It's up 71% year over year. That's why I like Reddit. Yo, Ulysses, I don't know if I said thank you, but thanks again for the 25 roses. Thank you so much, Ulysses. If you're still here, I appreciate you. So yeah, I do like Reddit. That's the fundamentals there. What's the ticker symbol for Neogen? I don't know what that is. What's up, man? Um, HTZ, is that Hertz? Yeah, so this company was just bought by Bill Ackman. Apparently, this is like a huge used car play. Like they have a lot of assets that are used cars, and that's what's supposed to be really valuable about this stock. But I'm not buying it. I would stay away from this one. If you look, the whole companies were $2.7 billion. And literally in the most recent quarter, they lost 450 million, then a billion the quarter before and another billion. So this company has lost more net income in the past year than the whole company's worth. So I get like the used car assets, but they're just burning so much money. So I'd be so careful. Oh, yo, what's up, Joseph? He said TXN, Texas Instruments. Yo, this company reports earnings today. So in exactly 2 hours, this stock is either going to go up or down a bunch. Or did they report earnings this morning? No, post market. So yeah, April 23rd, post market. So yeah, in 2 hours, this company reports earnings. So let's see the analog. They sell analogs. Kind of lost their growth there. It's only up 1% year over year. What about embedded? Yikes, their embedded processing is down 18% year over year. That's not good. So hopefully they can bring back the growth. So yeah, dang, look at that. The revenue's down 2% and the net income was down 12%. So that means they're losing their margins. But they're still making a lot of money, don't get me wrong. They're easily making over a billion of net income a quarter. It's just not as good as it used to. Yeah, like look at this. If we look at 2022, it was always over 2 billion a quarter. Hmm. But the whole stock will move on earnings today. What AI companies are on the come up? Yo, Amazon, Google, uh, Reddit, kinda. Oh, INOD. INOD is a great AI stock. Oh, NEOG. So what is this one? Oh, Neogen. Yikes. Yo, this stock is at an all-time low right now. So they're only worth $1 billion. So a food safety. So the sales are down 3%. So yikes. I don't know what happened there, but they're losing a lot of money right now. They lost 500 million last quarter. That's half the company they lost, and the sales are down. So yeah, nothing's, to be honest with you, nothing's really blowing me away here to really want to buy this stock. Maybe the worst is priced in though. Maybe the risk to reward is pretty fair here, but I don't know. I just would avoid that one. Again, not financial advice. Yeah, no problem, Joseph. Yeah, Texas Instruments should be fun earnings today. Yo, Odyssey, what's up, man? He said Royal Caribbean. Yo, this is, I don't like cruise line stocks, but this is the most impressive cruise line stock that exists. Check this out. Like, I almost don't believe it. No other cruise line is like this. They're making so much money every single quarter, like 500 million easy of net income every single quarter. And the growth is phenomenal. And you also get a 0.5% yield with the super low payout ratio. So Royal Caribbean, they're doing great. I almost like want to buy them. even though I don't love the cruise line industries, but they're doing great. They print net income. They're really impressive. Oh yeah, what up, Jello? Good to see you. Yeah, Ponta said Pepsi. Yeah, let's check out Pepsi stocks. So, and Jello, you bought Pepsi and Chevron. Yo, that's what's up. Look at or Pepsi right here. Didn't they just cost like a 4% yield or something? Or yeah, look at that, a 3.8% dividend yield. Yeah, thanks for the rose there, Odyssey, and the 6 lightning bolts. No way, dude. Thank you so much. So yeah, check this out. Pepsi has a 3.77% dividend yield. I wonder why they haven't kept up as well as Coca-Cola. Like their PepsiCo business, the Frito-Lay. Yeah, they own like Doritos, Cheetos, a lot of, the Frito-Lay business. But look, they literally just make 2 to 3 billion of net income a quarter. This one's a great just buy and hold for the long run. 3.7% yield is very attractive. And same with Chevron, Actually, let me go to Chevron real quick. And here's the one weird thing I'll point out. Look at Coca-Cola. Coca-Cola is at an all-time high right now, but Pepsi isn't. I do wonder why that is, or maybe Coca-Cola is more resilient because they're like, here's Chevron right here. This is another Buffett stock right here. So Chevron has a great yield. So yeah, you bought two great yielding stocks. This one has a 4.77% dividend, qualified dividend, which is great. Oh yeah, if you want to get this at Michael, it's in the link tree in my bio. It's a brokerage. It's in the link tree in my bio. It's the first link there. It's called Moo. But look at the net income on Chevron. It's incredible. They're making like 3 to 5 billion of net income every quarter. It's really impressive. And then they just pay a lot of that out in dividends. They have a sustainable near 5% dividend. Warren Buffett owns them for a reason. Um, Royal Caribbean makes traveling cheaper. That's why yeah, they're kind of being taken over by like Carnival Cruise Line, for example. They're not doing too good. Dang, look at Carnival Cruise Line. Their stocks in the gutter. Carnival Cruise Line is the same price that it was back in 1998. So I guess people are really liking Royal Caribbean over Carnival Cruise. Let's see. I think Pepsi were having issues with some products a year ago. Yeah, they were saying they had limited pricing power. Like Pepsi and Coca-Cola both said like they couldn't really raise prices that much. Like who's gonna pay like $3-4 for a can of Coke? I mean, it's tough. Ooh, J&J right here. But that's not really a problem anymore. Here's Johnson and Johnson right here. This is another great just dividend stock healthcare company. Look at the dividend yield. You get a sustainable 3.2% dividend yield, and they do constant stock buybacks as well. They're constantly buying back their own stock. So I really like Johnson and Johnson. And if we go to you want to look at the operating profit. They have some like lawsuits right now, but they're pretty much just making like 5 to 6 billion of net income a quarter. So yeah, the growth is kind of slowing. It's only up 2.3% year over year, but I really like them. They're like a safety stock. Whenever like tech goes down, people put the money into Johnson and Johnson as like a flight to safety because of the yields. Oh yeah, so here Anthony said PZZA, Papa John's Pizza. So unfortunately, this stock is at like an all-time low right now. I just made a TikTok about this. And here's why the stock isn't doing too good. They just sadly lost their growth. So if we go to these are the company-owned restaurants. So the company-owned restaurant sales are down 15% year over year. So they lost their growth there. And if we go to the franchise and royalty fees, the franchises are closing down stores. The royalty and franchise fees are down 10% year over year. So that's a little concerning. So they're still making net income every quarter, though. They're not losing money, but they have a 5.6% dividend yield. It might be in a little trouble. Uh, any hope for Pfizer? So yeah, Pfizer. This is the company that owns like Viagra. They owned a lot of the like COVID vaccines and stuff, but unfortunately, they kind of lost their growth. Like the stock is well down from 2019, which is weird. And look at this right here. A lot of people like them as a dividend play. They have a 7.5% dividend yield. The payout ratio is over 100%. But so if it's because their net income's been a little choppy recently, like their net income went negative, I just want to see this company consistently make net income from now on in the future. Like they sometimes lose money, so I just want them to be more consistent. But for right now, the past 4 quarters, they're easily making like 1 to 2 billion of net income a quarter. So there is a little bit of hope there. It's not the worst. It's not the worst. Um, can you explain dividend payouts in an IRA? Yeah, if you receive a dividend from like a REIT in an IRA, it's tax free. If you receive any dividend in a Roth IRA, it's tax free. I have a Roth IRA right here. So like Kroger, for example, Kroger pays a 2% dividend. Whenever I receive that 2% dividend, it's tax free because it's in a Roth IRA. Oh, that's my phone. My phone's getting low here. Yo, we gotta hustle. Yo, I've been live for like an hour, 30 minutes. This has been fun. I appreciate y'all being here. Yeah, if y'all want to hit the follow button, we go live every day, twice a day. I'm streaming on YouTube and TikTok right now. I'm reading both chats. And by the way, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. So please watch out for people impersonating me. Anyway, let's look at Apple Oven right here. This is a huge growth company. Like, I don't believe it. Look at this right here. Their advertising business, their advertising revenue. This is nuts. It is up 73% year over year. That is incredible advertising revenue growth. So that's kind of why everyone loves them right here. And look at the bottom line. They made 600 million of net income after tax profit just in the most recent quarter. I mean, that's an incredible amount of net income. So that's why a lot of people, I think, like AppLovin, and just the growth there. Oh, and here's a super high yielding stock. This is actually a high yielding stock that I like more than Pfizer. This is ticker symbol MO. So dude, here we go. M MO, this is Altria. The stock is pretty close to an all-time high. So not only do you get the nice dividend, but the stock has had some nice stock price appreciation. But look at this. Even if you buy the stock right now, you get a 6.88% dividend yield. And the payout ratio is only a 61%. They pay a qualified dividend as well. So this is one of the few high-yielding stocks that I really like that has a sustainable dividend yield. So let's see. Let's see here. Um, PFV is a 7%. Yeah, they have like a 7.5% dividend. Um, yo, invested09. Thanks again for the chili pepper, dude. Yeah, if you guys got any stocks you want to look at, let me know. Let me go look at my Robinhood portfolio again. Let's see how we're doing on the day. I haven't really checked up on the market in a while. So let's see here. We're up 2.28% on the day. Again, don't listen to me. Year to date, we're still down 8%. So this is my dividend only portfolio. Every stock in here actually pays a dividend. You know, you've probably heard of a lot of these. Actually, every stock in here is also in the S&P 500. Like United Health is my most recent purchase, by the way. I now own 4 shares of United Health Group, so that should be fun. Someone says, should I buy gold today? The price of gold is ticker symbol IAU. It's a little tough to buy gold because it's pretty much at an all-time high right now. Like, look at them year to date. Gold is up 25% year to date, so it's tough to buy them at all-time highs. But you, I wouldn't call you. I don't own any gold. I mean, probably a little bit of physical, but yeah. Oh, here's one. UUUU. So this is a uranium stock right here. You know, this is a Canadian stock, actually. This usually moves with all the uranium companies. You know, uranium powers nuclear energy. Heavy mineral sands and uranium. Yep, half their business comes from uranium. So, yeah, they kind of just sell a commodity. I don't know if he'll really outperform the market in the long run owning that stock. Ooh, what's up? Nara said Walmart stock. How's it going? So here's Walmart right here. This is a great dividend growth company. And, you know, if we go into a recession, people will still got to buy their groceries. People will still go to Walmart. And check this out. If we go to the dividend, you get a 0.88% dividend. And they raise their dividend too in a safe payout ratio. If we go to the net income right here, they're just making 5 billion a quarter. So they're making 20 billion of net income a year. And they own Sam's Club. Has anyone heard of Sam's Club before? They're like a Costco competitor. Like you buy stuff in bulk at the stores. You know, consumers feel like they get a good deal. You buy stuff in bulk, but you also have to have a subscription to get into the store. So that's what's so cool. They have like a recurring subscription revenue with their Sam's Club. So Walmart's a cool company, kind of like Costco. I like Costco as well. Oh, here's one. DE. Is this John Deere? Um, oh yeah, this is John Deere. If anyone's heard of like those big green tractors, this is their stock right here, John Deere, and they've done fantastic since 2019. Look at the dividend. You get a 1.3% dividend yield, and the payout ratio is only at 23%. So they got room to raise the dividend, and the valuation's fair historically. They're trading at 20 times net income. You know, they're in production, construction, financial services. How's that doing? Anyway, if we go to the net income right here, ooh, what happened there? So that let me look at this real quick. Sales are down 30%. Net income is down 50%. So the margins fell 30%. Yo, I don't know what happened. The fundamentals just collapsed, but the stock is at all-time highs. That's very rare. That's weird. So honestly, in my opinion, I probably wouldn't buy more at this valuation right here. I don't know if I'd buy this stock right now. I wonder what happened. They lost their growth. Maybe it was a one-time adjustment or something. Ooh, yo, what up? Hidden Hooper says QXO stock. Yeah, I'm reading both YouTube and TikTok chat. I'm reading the YouTube chat first. Here we go. Here's QXO stock. So $5.5 billion company, but sadly the stock is like collapsed let's look at the fundamentals here. So service and other, how's that doing? So well, let me just go right here. So the revenue is 14 million. So they have like no revenue, sales of 14 million. And it says they're making net income. That's not right. So they're doing some accounting tricks. You see how it says they made net income? Those are some one-time adjustments from selling assets or something because they actually lost 30 million of operating profit. This is starting to look weird. And the balance sheet looks great though. There's just something weird about this company. I need to do some more research on them. It just they're interesting. Yeah, that looks weird. What are you using to search for this? Yeah, if you want to get this app, it's in the link tree in my bio. It's the first link there. Oh, yo, Target. Yeah, dude. Here's another high yielding dividend stock some people like because check this out. Target pays a qualified near 5% dividend. So look at that. You get a 5% dividend and the payout ratio is only a 50%. So they actually have a lot of room to raise their dividend. But the reason the stock is like fallen so much, if you're like, why is the stock down so much? They lost a bit of their growth. The revenue is down 3% year over year, and the net income was down 20%. So they kind of lost their margins, but still, the dividend is super safe. If we go to the net income, yeah, they're still making easy a billion of net income a quarter. But that's like a dividend play, I think. Let's see. Oh yeah, QQQ. Yo, someone said QQQ. I'd much rather buy. I'll be quick about this. Buy QQQM. It's the exact same ETF, same Nasdaq 100 strategy, but with a lower expense ratio. Again, not financial advice, but I promise it's the exact same ETF, but with a lower expense ratio. Of course, they're owned by the same people. It's both owned by Invesco. The reason they market QQQ is because of the high expense ratio. They make more money doing that. They're smart for doing that. So here we go. Ooh, ticker symbol T. So did AT&T reported earnings this morning? So AT&T reported earnings. Let's actually check them out. So they beat on revenue, they beat on net income, and they slightly missed on EBITDA. So it was a mixed quarter. But yeah, AT&T, this is a nice dividend play. You get a 4.1% dividend yield. They had a spinoff, Warner Bros. Discovery. That's when their dividend like got cut in half. That's when they had the spinoff of Warner Bros. Discovery. But ever since then, the stock's done great. The stock's at like an all-time high. I don't know what's happening with AT&T, but congrats if you own them. They're doing great. Good evening. How are you, man? Yo, what's up, Rory? Good to see you, man. Doing great today. Look at us. Our portfolio is up 5% on the day in here. Every stock in here is green on the day, except for CubeSmart, of course, but they're a REIT. But ooh, yo, someone said SoFi stock. Oh, we could look at BBWall. We could look at Best Buy as well. Here's SoFi Technologies. This is a fintech. They have their own banking charter. They actually got their banking charter through a loophole that's now patched because of them. But look at their financial services revenue. Incredible. It's up 85% to a new record. So incredible financial services growth, but also incredible bottom line growth. They're making net income every quarter now. If we zoom out to last year, you know, no one used to take SoFi serious. They used to lose net income every quarter and a lot of it. So I really like to see that they're now making net income. They're a profitable company. So yeah, good man, happy. Yes, sir. And we get some earnings today. Two of my holdings report earnings today. Should be fun. Wait, someone said. Oh, I accidentally typed in. Oops, Build-A-Bear. I used to own Build-A-Bear stock. Here's Best Buy though. Best Buy, this company is all right. This is a huge dividend play. If you look right here, you get a 5.9% dividend yield. The payout ratio is getting a little high, about a 90% payout ratio. But check this out. If we go to the revenue right here, revenue's down 5% year over year. The net income was down 6% year over year, but not bad. They're making like 500 million of net income a quarter if you average it out. So not bad. I remember they were doing some tariff thing like and their sales jumped off that. They're like, buy a phone now before the tariffs hit or whatever. And their sales like jumped off that. But yeah, I'd stay away from that one. It's kind of like a KSS. Has anyone heard of Kohl's before? Please don't buy this stock. It's like a mall stock. Kohl's is at an all-time low. These are, uh-oh. No, TikTok. All right. Oops. We're back. Okay. Yeah, Kohl's all-time low. I'd avoid them. Ooh, someone said Chipotle. So, dude, I haven't looked at this stock in a while. So, yeah, dude, did y'all know Chipotle was public? And invested '09. Thanks again for the rose for the TikTok there. I appreciate you, bro. So, yeah, here's Chipotle stock. This is a restaurant. And check this out. If we look at the sales right here, this is what's so impressive about Chipotle. for a restaurant in this environment to, be up double digits, it's really impressive. So Chipotle's up 13%. And look at the net income right here. The net income is up 17%. They're making like 300, 400 million of net income a quarter. So they're just making a lot of money right now. So I can see why they're doing so good since 2019. Yeah. Opinion on Grab Holdings. Yo, this is a really cool company. This is Uber. So have you heard of Uber before? They do exactly what Uber does, but in all these other countries right here. So check this out. Notice you don't see the US or Canada on here. They do what Uber does in all these other countries like Singapore, Indonesia. And yeah, they do delivery, mobility. But the best part is Uber noticed that, and Uber is now the largest shareholder. Uber now owns 13% of the company. So if you own any Uber stock, you technically own some Grab, which is pretty cool. And they make so much free cash. So that was so smart for Uber to do because that just internationally diversified Uber, which is very smart of them. Ooh, oh yeah, what's up? NAF said PayPal stock. You know who just bought PayPal? You know what? I'll show you this. If we go to Nancy Pelosi's portfolio up here, Nancy Pelosi, I think her most recent purchase, let's see, her second most recent purchase was buying PayPal stock. So let's do some analysis on PayPal right here. Their total payment volume is insane. $422 billion. I mean, that's nuts. And they just make so much money. They make 1 to 2, or they make 1 billion of net income a quarter, we'll just call it. So yeah, 1 billion of net income a quarter, and the free cash flow is even better. They're making like 1.5 billion of free cash flow a quarter. So yeah, I just like that about PayPal. But they kind of lost their growth. The sales are only up 4% year over year, and the net income was actually down 20. So their margins kind of got hit a little, but still, the risk to reward looks very fair, very nice on this company. The PE ratio is dog cheap. I mean, 15 times net income. That's super cheap, lower than they were trading in 2020. So yeah. Uh, let's see. Oh, Nvidia stock as well. What up, Escape? Yeah, dude, Nvidia. Let's check out this one right here. Um, Here's Nancy's portfolio again. 5% of her portfolios in Nvidia right here, and they have a huge GPU market share. Nvidia has an 18% PC GPU market share. The automotive revenue keeps on going up. Check that out. And the best part is the bottom line here. They made 22 billion of net income just in the most recent quarter. I mean, that's an incredible amount of net income, and that's why they deserve all the hype because of this bottom line growth, the after-tax profit growth. So yeah, until that growth goes away, I think Nvidia is just a great buy and hold forever kind of company. And Nvidia is literally so big that they own part of individual companies. Like they own part of ARM, they own part of APLD, Nebius, and WeRide right here. The absolute pump and dump right here of WeRide. Uh, yeah. Yeah, if you want to get this app, it's actually a brokerage. Yeah, go to the link tree in my bio. It's the first link there. It's called Momo. But yeah, I really appreciate y'all being here. Yeah, VOO is a great ETF just to buy and hold. This is the S&P 500. We've all probably heard of them before, but yeah, breaks your money up into the top 500 companies. You should just get like 7 to 8% of your money back every year with the S&P 500. But yeah, I really appreciate y'all being here. I gotta go. Hope you have a great rest of your day. If you want to hit the follow button, we will be live later today for sure. We're gonna be doing another stream today. We go live every single day, twice a day. I'm also streaming on YouTube. Yo, the main way to support me is please subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. If you missed anything, you can rewind the stream as well. I just really appreciate that. And yeah, hope you have a great rest of your day. And yeah, see you guys later. Thank you. And thank you all for being on the YouTube stream. Hope you have a great rest of your day. Thank you, NAF, Joseph. See you all later. And please hit the subscribe button and the like button. Check out my most recent YouTube video. My most recent YouTube video was, if you'd like, I did a whole analysis on United Health Group. I bought them yesterday for the first time ever. I own 4 shares of them. So yeah, my most recent YouTube video is an analysis on UNH. Go leave a comment. Let me know.